I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome to the show, Bob.
Yeah, good to be with you, Jim.
The U.S. dollar continues to climb, but not as much as in the past.
Well, it had a pretty good zoom a few months ago, up to almost 100 on the DX index, and then it retreated back a bit, and then it started to head up again here. So this week has been quietly going up, but it seems to be having some effect on some commodity price. Yeah, so it's crept up. It's up to almost it's up to 100 on the index, and that's put some commodity prices down. But crude oil was going to head down anyway. So the U.S. dollar index is trading just a little bit above 100, and largely the U.S. dollar index is rising, which is confusing the street immensely, because we all know that the Federal Reserve is being absolutely irresponsible and pumping out credit as best it can, but the U.S. dollar keeps going up, and which has been our forecast for a long time. And one of the reasons for it is that during the bubble, which is debt bubble, which is still on, there was a goodly amount of the debt was written in contracted in New York, being the financial center of the world, and it was also written to be paid back and serviced in U.S. dollars. So then you've got the debt service side being sort of a constant bid in there. Then you also had the other game where extremely low interest rates, the carry trade would get in on that and be shorting things against U.S. dollars. So it's the funny part, Jim, is that I'm sure the Federal Reserve must be extremely frustrated by this, because, let's face it, their ambition is to destroy the U.S. dollar completely. And over the last few years, they're unable. So, we thought that it'd trade around 98.5, 99 because the last rally up was a pretty good move, and but it just quietly keeps going up here. So, and then you also have had some of the moves in commodities. We were looking for copper to decline down into a seasonal low in November, and it got down to $2 about 4 or 5 days ago. A little bounce in here. The other seasonal we were looking on was the decline in crude oil down to into December, and that looks like it's resumed here now with the crude at just a little under 42, because it did rally up to 50 a few weeks ago, and they're not there now. So this is one of the features of a post-bubble contraction, is chronically weak commodities and a chronically firm senior currency. So it seems to be working. And now what we're looking at here now, the latest stock market rally did get a little overbought. We had, a 17,900 target on the Dow Jones for that rally, and it got somewhat beyond that, maybe 100 points or so, something like that. And it is in a bit of a pattern where it could sell off, but hey, they're liking the stock market these days. Within this, we're looking at the broker-dealer index, XBD, which is what it is. Broker-dealers, and this, of course, where all the fun of and focus of financial engineering that's been going on is there. And so we've sort of sarcastically looked at it as the Christmas bonus indicator, and if it goes down in the next few weeks, it'll be saying that the Christmas bonuses may be a little trimmed from where they might think they'd be. But, it's amazing. You've got serious financial deterioration going on. You've had quite a rise in lower grade bond yields. The junk yields have been increasing again. And it's almost as if the stock market's impervious to it. But you've also had that peak in margin in May on that. And then the latest report on margin is yet another decline, so that's not constructive for the market. But the senior indexes, they keep them right up there. But I think they're vulnerable. But perhaps this renewed decline in crude oil may be a bit more of a sobering event.
I saw a report that consumer confidence is actually at a 4-year high in Europe. Why are they so confident?
Oh, who knows, Jim? Consumer confidence is flourishing in the U.S. here with their Black Friday sales. Apparently, people are internet sales have been very good, and actual sales, they've got people rushing the stores and everything else. So, yeah, it's still positive, I guess. But as I say, underneath it, you've got lower grade yields are increasing because the perception of risk is increasing. You've got weaker commodity prices, which suggests that most business and industry are facing weak pricing abilities. They may be doing business, but how much profits are they making on? So then when you've got a lot of corporate debt outstanding or lower grade stuff, and your earnings are slowing down, then you are losing the ability to service that debt. So then, of course, we all know that you've got the rating agencies like Standard & Poor's and Fisk and stuff like that are watching these companies, actually countries too, because as commodity prices go down and retail sales diminish, the ability to tax by either municipalities, counties, provinces, states, whatever, federal government, the tax revenues begin to slow. So this is all happening. The financial markets the senior stock indexes may be booming, but not much else is. So particularly as you look at commodities. And
savvy consumers have noticed price hikes at the start of November by retailers so that they can say, look, we have a 40% discount here for Black Friday. But yeah, you jacked your prices 35% at the start of the month.
Oh, that's possible.
Well, it did happen.
Yeah.
For many. So what looks like a bargain today perhaps isn't.
Yeah, I know what you mean.
Although they said a lot of shoppers caught on to that, and the companies that did it have been called out. We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Bob Hoye. Bob, what's happening with mining companies right now?
Oh, yeah. If you're looking at the base metal miners that were predominantly base metals, and many of those companies also thought the cash flows out of crude oil were good, so they had exposure there, and of course facing weak commodity prices that just go on. So when I went to a couple of the money shows in March in Singapore and Hong Kong, which was really interesting because the one in Hong Kong was the premier event, and the sense there, most of the presenters were talking about the phenomenon of the middle classes being developing and expanding in Asia and in India. This was the bellwether. This would increase commodity prices, through that, and everybody was on that theme. Although commodity prices had recovered on a seasonal move out to last March, April. Our view at that was that no, this is just a seasonal move, and after the summer would be heading down. So you take a look at the DBC, Deutsche Bank Commodity Index. So it was, in last year from, say, January, it rallied from 16.94 to almost 19, and that was in April, and then here we are in the hit very hard down into August with the first panic out of Asia, got down to 1433. Now it's down to 1405, making new lows. This as we're speaking. So again, it's relentless. Now also, this has hit the gold market today with the slip in crude oil, which is probably seasonal, and that's moved gold down to a new low for the move, and that's just going to continue to happen. We continue to tell people that when you're looking at the gold business, you want to make sure that the companies are making money. Then that means their costs have got to be in line with what the bullion price is, and there's not too much going for that yet either. So one has to be careful here, although perhaps one could begin to accumulate a few gold shares in here. It's just so beat up that there could be a trade, and we would emphasize that it would be a trade if one were to accumulate a few gold shares in here.
With copper prices so low, Bob, why are people still selling, or I should say stealing it?
Well, I haven't seen a headline lately on anybody stealing copper.
Oh, yeah, we had a major power outage. Somebody went and took a bunch of copper connectors out of...
I can't believe that's difficult. But it's not as prevalent as it was, say, 5 or 6 years ago, when virtually every week you'd see a story in the newspaper about somebody getting electrocuted while trying to steal copper wire.
Well, maybe that's why we don't see as much copper theft anymore. Shocking. Yes, absolutely electrifying. Are there any bright lights out there for somebody looking to invest right now?
Well, we're looking at long treasuries, long Government of Canada bonds. They peaked much earlier in the year when crude was crashing, like last January. And there's been 3 good rallies since, and each one to a lower high. I think one should be in 3 to 4 year high-grade corporate bonds. If you're in a long treasury, you don't have much credit risk, but you got price risk because the market can change. Lower-grade bonds, well, that was the best for those was in June of 2014, and yields going up there, prices going down. So we've been avoiding lower-grade bonds and preferred shares, shall we say, with both hands ever since 2014, and there's no reason to go back into these. This is going to be nightmare territory. So one should be cautious in the general stock market. One should be avoiding low-grade income stuff, and what do we see? We can see accumulating a few gold shares on weakness, and other than that, it's pretty dull. You know, people like to be in something. There's always that urge. And if you go to short-term stuff, there's not much return there. But if you do get another major decline in the stock market, you'll be able to buy stocks in the future at quite a bit lower price. That's for senior index type stocks, investment-grade stocks. Stuff like that. It's not an exciting picture, is it, Jim?
Well, on the automotive side, we saw Volkswagen, of course, take a big hit because of their emissions scandal, and Toyota over the last 4 months is outselling Volkswagen again, and Volkswagen had just managed to become the #1 retailer of automobiles in the world. So their little cheating effort, perhaps a huge big backfire for them.
Oh, yeah, it was also difficult because in different countries you have different emission requirement, and they used a sleight of hand to look like they were achieving it. But the problem is that there was not enough conversation between the automobile manufacturers and the government's insistence on what they think they could do. They got off on the idea of diesel cars because they could produce less carbon dioxide. Well, carbon dioxide is not a problem at all, but diesel engines create a lot of nitrous oxide and a lot of particulate, and that was the issue. What Volkswagen on one side was trying to do was to make an engine that performed well and gave good returns, and what the governments were doing was requiring something that made them run less well, and then you got different demands in different areas of the world, so they didn't take the best way out in handling an impossible condition by government demands. So I feel sorry for Volkswagen. I feel sorry for many of the people who have Volkswagen cars.
Bob, what do you think the fallout's going to be if the Fed goes ahead with its threat to hike interest rates next month?
Interest rates have been going up. As I said, low-grade stuff has really gone up in yield from 5% in 2014 to around 8.5%. That's for a triple B bond, and triple C stuff is up to 16%. So interest rates have been rising. And our work on what the senior central bank does at times of great financial mania such as we're in is that they're 3 to 4 months behind the changes in market rates of interest. So market rates of interest, if you look at the low-grade stuff, have been going up. And I think maybe a year and a half ago when the Fed started talking about raising their administered rate, I think that was just kind of like waving a flag of, hey, we can be responsible. And of course, market conditions haven't allowed them to raise rates. So now, maybe we're in a condition where they have to follow what's been going on in low grade stuff. So it's become a nonsensical issue, and very little cause and effect in it. And all we know is that you've had also interest rates for long dated treasuries have been rising since January. So the trend's already there. When's the Fed climb on board? I don't know. We could make bets on this one.
And Bob, before we go, we do have a question from one of our listeners. John wants to know how you calculate the relative strength index, the RSI. What is that, and what does it mean?
Oh yeah, well, it's a momentum measure, and when you have a terrific rally going on in something, doesn't matter what it was, but this related to copper. It's a measure of the enthusiasm, and we use relative strength a lot. And then going the other way, at a high, and the biggest one was for gold and silver in 2011, and the silver-gold ratio, silver always outperforms gold. The RSI on that got up to 92, and the only time it had been at 92 was at the huge peak in 1980. So this one question regarded copper getting an RSI down to 19, and John's wondering how we calculate that. Well, I just go into stock quotes chart, and it's there. You can do if you're doing a weekly or daily chart, you'll get a different number. But also within the RSI number, there's different averages that are used, so you have to make sure you're on the same one. But that's all I can say is if you get over onto stockcharts.com, most of their charts show you can put in the RSI and it shows it. So, but that's the way to look at it, is to get on, make sure we're all on the same system here. So we look at stockcharts.com and the RSI on that either daily or weekly.
Bob, thank you very much for chatting with us.
That's a pleasure.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, our popular YouTube channel as Talk Digital Network. You can forward questions or comments for the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.